is Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
$560-odd points on the Dow, right at the highs, 2.2%.
Low volume on a big up day and VIX collapsing tells you much of the selling has been exhausted.
We're going to be seeing a lot of earnings coming up here, and I think it'll be the comments accompanying those earnings that are going to be most significant.
Goldman Sachs finishing up more than 3% after it beat earnings estimates in Q3. Morgan Stanley stock had its best day in 2 years.
There is a huge commentary that we're at peak earnings, that earnings can only get worse. We believe we have a couple more good quarters in earnings.
Good morning. Welcome to Bazaar Morning Call. I'm Lata, with me Anuj and Sonia. And we are in a festive mood because it is either Happy Ashtami or Happy Navami. There are some people in India who are celebrating it as Ashtami and some of us as Navami, but clearly Wall Street is celebrating, whether it is Ashtami or Navami. So there's festive greenery across Wall Street, and it's come most importantly on the back of earnings. Now, that's the best rally you can ever want, any bull can want. How many of these companies? Morgan Stanley, Goldman, Johnson & Johnson, United Health, all of them posting better than expected earnings. And the green has spread to Asia. You've seen most of the Asian markets, the ones that are trading in the green. Hong Kong, I think, is also celebrating Ashtami. It is closed.
It's shut.
But the others are all fairly in the green. The Asian currencies are also doing well. Most of the EM currencies have done well. Now, the advantage for India is that while we did have a bit of a celebration yesterday, the rupee rallied a goodish bit after the 3:30 close of equity markets. Likewise for bonds. Bonds were about, what, 7.9, 7.91 when 3:30 the markets closed. They went down all the way to 7.87. The rupee rallied all the way to 73.46. So the rally I was expected early morning happened by end of day. So probably we have a little more cheer left. And I would think even allied good news is important. IIFL and Piramal raising money. You know, NBFCs who have not been able to participate in the rally much are all showing signs of getting out of this problem of liquidity in creative ways. So my sense is today there is reason for a rally. There is one small counter. Yesterday it was $80 crude. Today it's 81.5. And we already rallied yesterday. I just want to know whether that might take off a little bit of the bright spirits.
Okay, well, you said it right. I mean, crude is the only irritant, I guess, for the day. But the SGX Nifty doesn't believe so. I mean, it's rallying quite a bit. It's up, I think, more than 100 points at the moment. So the start will be good. But whether that will sustain or not, given that tomorrow is a holiday, you may see some caution. You never know which way. I mean, the US markets have been so mercurial lately. You never know which way you'll wake up on Friday. Anuj, morning. So the worst of the market slide is behind us. At least that's what the tape is indicating. But given that we have a holiday tomorrow, how do things change for traders today?
Morning, Sonia. You know, the rally started on first day of Navratri. So, and ever since it's been good day, for, good tiding for the bulls. Today is technically the last day of Navratri, is the last working day. So perhaps a bit of a culmination of the market rally. Look, for last many days, the call was to look for dips to buy, and that has worked. Now, after a big rally and 100-point gap up, do you chase it? Perhaps you do for some bit. Hang Seng is closed today. The VIX was down quite a bit in US market. But my only problem is if you open at 10,700, between 10,700 to 10,800, there's a bit of a congestion. 10,780 is the 20-day moving average. So, right now you're seeing a bit of a congestion. So risk reward, risk reward for last many days perhaps wasn't favor of taking longs. Today, the risk reward might not be, taking longs straight at the opening. But two or three things. Yesterday, we were making this point on closing bell that there are some signs that perhaps the FI selling is back. And let's not have any bravado about this, rally continuing without, big FI support. For last many days, the FI selling had come down. In fact, there was one day of buying as well. Yesterday, there was 1,000 crores of selling, and HDFC Bank and IndusInd Bank ended near day's low. Just keep an eye on that internal. That's very important. Is the FI a willing seller again at higher level? That, I think, is something I would want to watch out for. Also, Brent is trading at 81.5. Yesterday, we were trading at sub 80 when we had that big rally in Interglobe, oil marketing companies, the Bank Nifty. That's also something that you need to take on board. There's weekly options expiry on Bank Nifty. So again, chasing may not be a good idea. Having said all of that, let the screen tell you if the market is, willing to reverse, is peaking off or not. The market will give you an indicator. Perhaps today would be the indicator. Today everything is looking good. The market's, showing a bit of a gap up. Dow is up 550 points. Perhaps today is the day the market gives you that indication that this counter trend move that we had, a sharp tradable move, is getting over. But if the market has to take out 10,800 and keep on moving, in that case, perhaps you'll have to say that the original trend is back. So let the screen take that call for you. But today, chasing, I don't think would be the best idea right now.
In earlier times, Infosys used to be the barometer of the market sentiment, right? I mean, the numbers were good this time. Dollar revenue growth was strong. I think margin miss was the only irritant, but otherwise things look good. You think that could help sentiment a bit?
That could, but my only worry is in PADR yesterday, I was tracking it. It was up 4%. In a really, really strong US market. The Nasdaq was like surging. And in a very strong tech market, the Infosys ADR was up. It opened 4% higher. It ended 3% higher. If the numbers were that great, it should have ended 10% higher. I am not too confident about, Infosys. If it opens higher, but it will open higher, of course, 3 or 4%. But don't forget that, Infosys stock has rallied, and it's not cheap. Compared to its own historical
For me,
averages.
the one tailwind that is missing is that rupee from 74.5 is now 73.5.
Yes, so
a bit of the tailwind is gone.
Exactly.
Okay, guys, we're not going to let anything dampen our spirits. As you can see, we are completely dolled up in our festive attire. Lata is every day, but for Anuj and me, it's different today. So we're going to enjoy the festivities.
I like that. I'm dolled up every day. I'm in Indian attire every day.
Okay, you're celebrating the festivities every day. Let's put it that way. But anyway, it's gonna be a long day ahead. We have Reliance Industries earnings at the end of the day. So yes, we're going to be celebrating the festivities, but we're not going to be going home early for sure. Let's take a look at what our wise experts have to say as we head into trade this morning. Vinod Karki of ICICI Securities believes that volatility in stock prices will continue as long as fear levels remain elevated in an era of tightening global liquidity, rising yields, escalating trade and geopolitical tensions. He says unlike other oil exporting emerging markets, India has an added disadvantage in a rising oil price environment. Vinod adds election-related news flow will continue to add to the uncertainty. He continues to believe that Indian equities are currently in a bull market correction, given that growth expectations have not changed and inflation expectations remain within control.
Okay, money market views. Pramil Brahmabhat of Veracity says softness in crude oil prices, positive macroeconomic data and recovery in domestic equity markets should help the rupee head northward. He expects a spot USD-INR pair to trade in a range of 73 to 73.60.
And Dhaval Dalal of Edelweiss says a spate of good news on the economic front and the RBI's dexterous handling of banking system liquidity through OMO sequencing has resulted in improvement in demand for the IGBS last week. That has caused yields to trend lower. He expects the 10-year benchmark bond yield to remain range-bound with declining bias in the near term and trend towards 7.75 to 7.80% based on technical factors.
Okay, now that's quite a rally. That's quite a rally if he's expecting 7.75 to 8.
Okay, and that would mean perhaps good things for banks as well. But let's talk about the global cues. Here's Nigel with the world view.
Well, very strong handover coming in from Wall Street. Big rally being seen all across those indices. In fact, it was the best day all the way since March 2018. So things look good. We had earnings reactions that came in there, and they looked very, very good. Morgan Stanley, Goldman Sachs, both of them beat estimates, as well as Johnson & Johnson and United Health. So earnings season panning out very, very well. And I'll tell you what, Netflix came out with a set of numbers post-market hours, and that stock has rallied close to around 10% in post-market. So it could support the tech-related stocks even in today's trading session. Besides that, the August job openings, they recorded over 7 million odd. And clearly, President Donald Trump liked it very, very much. He put out a tweet. He says America is doing well, profitability is up, and in fact, the number of jobs is well created. He says that's clearly evidence. He also says that he's gone one better than Obama, and in terms of what Obama did. So that's the point that he put out as well. US markets did well. European markets as well did very, very well. All the three frontliners did well. Even the peripheral indices, they put on good weight. But we are talking about the Indian markets bouncing up from the recent lows. The Brazilian index is up nearly around 9% for this month. The Russian index as well was up close to around 2% in yesterday's trading session. And no worries this morning in terms of the Asian markets, all of them trading with a big rally of close to around 0.4% to around 1% odd. That would mean the SGX Nifty is indicating a 100-point rally just to kickstart trade. So things looking good, but the only spoil sport could be that Brent crude prices have moved from around $80 per barrel to around $81.50 per barrel. So that could be the bit of a party pooper. Back to you.
Well, stay there, because it's like you're ending on the Middle Eastern note. What is with his Aladdin attire, huh? We want to see Nigel in his Aladdin attire.
He's going to sit on his and the magic carpet and, you know, fly to the other side of the world. And perhaps,
I want the golden lamp. I want the chirag and the genie.
I would like to tell my son that, actually. That going to be flag across, etc. Okay. Good times.
Well, thanks. Have a great day, Nigel. It looks like the markets are going to give the bulls a great day, but let's ask the expert, Adrian Moad, the EM equity strategist, a long-time veteran of emerging market equities, joins us now. Good morning, Adrian. Thank you very much for joining us. It's a festive day in India, and the markets are in full celebration mode. Do you think that the EM worries are over, or do you think we can participate in this rally this far and no further?
Yeah, so I think there's a sort of question mark on the EM concerns, but perhaps really what's driven markets in October has been the US equity market sell-off, particularly in tech. And I think that was very similar to what we saw in late January, early February this year. So what happens is you get a large move in US bond yields, which is exactly what happened in January. It happened again in September this year. It's not the level of the bond yields that matter, it's the speed at which the yield changes. And that causes a correction in risk assets, particularly expensive risk assets like tech. And that sells through to other global capital markets. Quite useful for EM was it was a sort of stress test for EM, a bit more redemption selling. And I think these types of events are quite good for making market lows. Now, if we think about EM as this big underperformer year to date, particularly versus US equities, I think the easiest way to explain that is simply the difference in earnings per share growth, which is something like 13% higher earnings per share growth in the United States this year versus EM. So that's a huge pool of capital moving to a faster growth area, which is US versus EM. Now, let's imagine we're having this discussion 12 months from now. I think the earnings share growth premium will return in favor of EM. I think EM will also be offering you undervalued currencies as a sort of currency overshoot in this strong dollar environment starts to play out in your favor in 2019 versus working against you this year. So I'm becoming increasingly more constructive on EM in general. The other thing I want to highlight here about EM is remember that 30% of the market cap is China. At the beginning of the year, 3-month interest rates in China were 4.9%. If you look at corporate bond yields, they've also fallen this year. So I think you're beginning to see some evidence of a slightly easier monetary environment in China. And that's more as performing EM market here. But I think you can rally until you...
Okay, Adrian, I think there's some issue with your audio. So what we're going to try and do is just touch base with you once again. But I guess we got a gist of what you were saying, that you're getting constructive on emerging markets now. And that's always good to hear. We'll do one thing. We'll take a quick break on that note. On the other side, we'll list the top 10 stocks to watch out for. Lots of big numbers came in post-market hours yesterday. All that and more in just moments from now. Stay with us.